So we have a government shutdown. The last thing you would probably expect is the Dow Jones and the equity markets just rally. Well, that's what happened today. So why didn't these things really move? Today, we're going to talk about what Trump did with India. There's a trade agreement that just passed, and I'll give that one a thumbs up. And then we're going to look at the manufacturing and and that's skyrocketing. And then we're also going to look at the jobs reports. Because if you're watching this video, you're probably a homeowner, maybe thinking, I can refinance maybe if these come down to $599. Or maybe if you're a home buyer, it's like, okay, if these stay here, I maybe couldn't buy. Maybe you're a realtor, loan officer trying to explain to your clients what in the heck happened to those today and why. So that's what we're here to answer today, folks. My name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. My slogan's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? I'll give you that at the end of this. You're here for these. So let's get to it. So here's what happened today. Saturday night, or I guess Sunday morning or whenever, the government shut down. And then you come in and you're thinking, okay, this is going to be bad news for the markets. And then you start to see, well, how's the Dow Jones up 500 points? This would be up even more if there wasn't a couple stocks that weren't doing too good. And the reason behind this is right through here. Manufacturing in this country just went from kind of in the toilet to numbers we haven't seen in a long, long time. And that's what happened today. So what number came out today was a manufacturing PMI, and this thing has been steady as a pancake for, I want to say maybe 5 or 10 years. Well, it just peaked over 50. And what that means is we're in expansion mode here in the U.S. So you might think this is a bunch of BS or whatever. Hey, you can post your comments down below. But this is actually good news when it comes to the economy. This is saying the economy right now is robust. And then we have another piece of the puzzle that came in today. Remember those tariff deals and how it's going to make costs of everything so expensive? Well, it looks like they're going to reduce the ones on India now because Trump and India just came to an agreement. So how's that faring in the markets? Well, we have a government shutdown. We have Trump just made some agreements on tariffs and stuff. And now we have the manufacturing in our country doing really well. I'm thinking, what? Well, let's get over to this thing. Here's what the bond market's telling us. Now, we got two bonds today. One over through here. This is Fannie Mae and Freddie Mac. This is conventional loans, and I'll go over that in a second. The Ginnie Mae, that means these are government-sponsored loans. So they're both kind of the same thing. See up there where you see the prices of these things? Well, what happens is if you're new to our channel, we follow these things and figure out what's going on with mortgage rates. Okay, these are conventional loans and these are government loans, but it works the same. All you have to understand is right through there. If the price of the bond's going up, it's not going up today, but if the price of the bond's going up, that means yields are coming down. Well, if it's a bond that's on mortgages and the yield comes down, that means you're going to have lower rates. Well, yeah, you're going to have lower rates on conventional loans and government-backed loans. But today we have a negative 20 on each side, and that's not good news. So mortgage rates should jump up. This is a pretty big move. But the next thing we want to look at is what does the Federal Reserve look at when it comes to all this stuff? And here's where the bad news comes in. Well, not bad news for the economy, but bad news for you guys out there if you're looking to buy a house or maybe looking to refinance. And here's what I mean. When the Federal Reserve steps in and usually brings down rates, it's usually because there's uncertainty. Think about why did mortgage rates get to like 2 or 3%? COVID. Okay, so when an economy is doing really bad, well, they pump in stimulus and do their things to make rates come down. When you have an economy that's doing kind of what it's telling us is doing based on a lot of these numbers, it's telling the Fed, okay, maybe you don't have to do anything. So they focus in on there. They control the federal funds rate, but they look at the PCE on the prices of things, inflation. And I got something for you here, a chart in a second. You might be a little surprised on where these numbers have been basically from 2024 to where they are today. We'll go over that in a second. But then the unemployment numbers. So here's what the market's thinking today. Well, if we have that PMI number, the manufacturing number saying, okay, the numbers are fantastic, well, don't you think the jobs market's going to be okay? And the Federal Reserve cut last time or the last few times because they're like, the job market's deteriorating. Well, now with these PMI numbers, it's saying, okay, that's not going to be anytime soon. So now let's focus in on over here. So inflation. So let's take a deep dive a little bit into where inflation's been and where we are today. Because I know mainstream media, they gave you all their things. And yes, things feel more expensive, don't they? Like, I think I explained to you guys, I just had to renew my health insurance. You realize it's $1,900 a month for just me and my wife. $1,900. It's crazy. But that's where we feel a lot of that pressure because then our net paychecks, they're dismal. But here's really where inflation's been since 2024 through where we are basically in January of 2026. So if you go through here, and I'm going to go through it real quick, and this isn't partisan. I'm not trying to be political here. I'm just telling you where the numbers are. Inflation right through here, the CPI in January 2024 was 3.1%. Then it went to 3. Now we're at 2.3. Okay, so that's coming in a good direction, I would say, on inflation. Then you go over to here in mortgage rates. Well, mortgage rates in 2024, January, were 6.6. Where are they right now? We're at 6.1, something like that. So they're 0.5% lower than where we were. And they spiked last year. So we're almost a full percent lower than where we were last year. Okay, so that's good news. You go down through here, oil. I don't know about you guys, but my gas prices in my area, they're pretty good. So right through here, here's where oil was in 2024, $76 a barrel. Before that, it was higher than that. Where are we at now? 60, right around there. So it's considerably down. Now, natural gas prices, they hiccup a little bit. They went from $2.21 to almost up a whole $1 there. But let's get down to the thing where everybody's like, okay, we can't afford food anymore. And I kind of feel the same way. But let's break down. What I did is this is the Thanksgiving dinner, and they do a survey of this thing, and you can actually find it online, but I don't know where I found this, but let's go where the numbers are. And it's intriguing because when I first saw this, I went down here and said, okay, it's the same number, so they didn't make any adjustments, but they did. Look through here. The biggest item you have on this menu is what? Well, it's turkey. It's because it's Thanksgiving. So turkey is down 11% from where it was. Okay, and then you go down through here, stuffing, all those other areas, that's up 29%. We'll skip the stuffing. Okay, so this is where we've kind of been from where through. So the biggest items, again, was the turkey. Then you also have cranberries and what else? Peas. It's giving you maybe inflation isn't out of control. So if we have inflation that's not out of control, we have a job market that's not bad, why would the Federal Reserve cut? Well, what do you do if you're stuck at a rate at 7 or almost 8%? I have a fantastic tool. If you're a homeowner, it's not the RateWatch tool. It's a new calculator I have. But you brought up the RateWatch tool. Okay, homeowners, I need you to do something for me. Go to our website, and it's right through here. RateWatch 2.1. Plug in your mortgage information in there. Let me know what rate you'd like to refinance, or at least kick the tires, or how much of a monthly savings would you like, and we'll call you then too. We don't sell the data. I monitor this myself. So what will happen is when your loan triggers because you hit that rate that you're looking for or that savings, I'll call you, text you, and email you, and I'd love to help you out. But we also created a new calculator. Check it out down below. You can do all kinds of things with this. And it's going to tell you, should you refinance now? How much of a savings are you going to have? And then wonder if I use my savings. Let's say I'm saving $300-$400 a month. Our average savings right now is $500 a month. Let's say, okay, well, let's apply an extra $250. How much quicker could I get my house paid off? It's going to do all that for you. So check out the calculators down below. I'll give you a quick secret. If you use the promo code Dan, and it's all capital letters, you'll get it for free, but donate $1, folks. We've spent a lot of work on this stuff. So that's where we're at for today. So what my expectations are, well, the bond market's kind of taking it on the chin right now. It's down 20 ticks. So here's my expectations of where we're going to go from here. The government shutdown, I hate to say it, it's about the ICE situation, all this. I'm not going to get political, but this isn't the time and place to do it, folks. Let's work on that one a little bit down the road. Let's not shut down the government because the systems that are getting affected right now are huge. And we won't even have the jobs report numbers this Friday because of a government shutdown. And it's basically, you guys look into it. Let me know what your thoughts are down below, but don't get in arguments down there. We're here to help each other. Okay, so what my thoughts are is I don't really think much is going to go on with this stuff. I think the government's going to come down or out of shutdown mode. Somebody will come to their senses and say, okay, let's do this. So that's going to come out. Then we're going to start getting more and more inflation numbers. The inflation's going to still come up a little bit more, folks. And I think we got another 1 or 2 more readings of it, and then it's going to start coming down. Trust me on this one. Check out my 7,000 videos that I have. Subscribe down there and check out what I forecasted last year, the year before, and the year before. I'm doing pretty good when it comes to that. So if you need some help when it comes to a mortgage, looking to refinance or purchase, I'd love to help you. Remember that slogan I had, one application, one credit pool, that stuff. Here's what we do. I work at a bank bank that provides me licensing in all 50 states as well as Puerto Rico. But the cool thing is we're set up with almost 40 other lenders. And the reason why we have them is we needed additional programs. And we also want to say, okay, if you have better rates today, we'll just use your system. And that's what we do. So if you want to get involved in that system, if you can find all these rates on your own, God bless you doing that. But if you need our help, we'd love to help you. So put your information up there. Send us your loan estimate. If you already got a loan estimate, you're like, Dan, can you look at this one and see maybe some of your investors, give me maybe a lower fee, maybe lower rates. And if we get you both, I'm going to win you as a customer. So if you need some help getting pre-approved or pre-qualified to buy that house in the spring or looking to build, love to help you. I don't think you're going to have any issues with rates in the next couple months, even I think in 2026. I think we're kind of peaked right here. So I'm still saying rates are going to be about 5.875 to 6.25. And that's my forecast for Q1. And it's probably going to be my forecast in Q2. But subscribe over there. So every day I post a video, you get an alert. And my whole goal is to hope if you're a homeowner, helping you refinance or making sense of this. If you're looking to buy a house, how can we qualify you? Which programs make the most sense to you? And if you're a realtor or maybe a broker out there trying to help your clients understand a little bit more of what happened to those today and why, hopefully now you'll know a little bit more. So thanks for watching, folks. Check out those calculators down there below. This one is going to be really game-changing for those homeowners out there. So thanks for watching. Hope to see you tomorrow at the opening bell to see how this mess starts another day. Thanks for watching, folks. Take care. Bye-bye.